Joining me now to talk more about these markets is Adam Turnquist, Chief Technical Strategist at LPL Financial. Adam, good to have you this morning, joining us from Green Bay, Wisconsin, over there in the Midwest. And can this record rally continue?
Hey, good morning. Great to be back on. And we think it can. There's still scope for upside. Of course, we view things technically across and fundamentally as well. But when you look at the technicals here, we have got great momentum going into the second half. Typically, when you see this short rally over, I think it's been 3 months since that April low, you tend to get momentum to continue. When you look at leadership in the market as well, right now it's very cyclical. It's more of those pro-growth type sectors leading the way. You have areas like financials and industrials leading, not to mention semiconductors breaking out over the last couple of weeks as well. So that leadership, a good sign for a sustainable rally, and arguably a low bar here as we go into earnings season this week. When you think about expectations at about 5% earnings growth, that's been downwardly revised, especially with the banks coming in. They're a little bit more overbought technically, but we'll see how it shapes out in terms of what we get tomorrow from some of the big banks.
Yeah, many people have said, and I think it sounds like you agree, the market is climbing a wall of worry, but it does seem as if there might be some fundamentals in place that can support that. Also, the volatility index relatively muted, right, compared to, I think, the most concerns that we had seen during the height of the volatility earlier this year. How does that pave the way for a continued climb?
We've been surprised by how low implied volatility is when you look at the VIX getting down to 16. Some of the other volatility metrics that we look at, extremely low against the backdrop. When you look at least the trade policy, there's a lot of uncertainty there. We know we believe we're past peak policy uncertainty. We witnessed that in April, but still very elevated, very fluid situation as we've learned here, and waiting for this August 1st tariff implementation. We'll see if we get a trade deal with the EU. But low volatility is good for the banks. It's good for M&A. It's good for the IPO market. One of many reasons why we like financials in the second half here.
Interesting. So what about financials is attractive to you at these levels?
When you look at just the overall growth story for financials, it's pretty compelling. The technicals here look good. You look at the S&P financial sector breaking out to new highs recently, very good relative strength, and also very good breadth within the sector. So we look at how many stocks are participating in the rally. That's been very broad. The regional banks are finally kicking in here as well. They suffered a little bit of a deeper pullback in April. They've subsequently recovered. And I think when you look at a backdrop on the macro of deregulation as well, that's another potential beneficiary for the sector as we start to get some of those more pro-growth policies implemented from the White House.
I want to hear more about the technicals, Adam, that you're watching most closely here to develop this thesis. Of course, we know technical analysts look at the charts and the patterns and what they can tell us, for instance, about momentum.
Yeah, absolutely. And when you look at the momentum we've seen coming off those April lows, we were up over 25% in 3 months. When you backtest that and you look at just how many times that's occurred and what do the forward returns look like, whether that's 6 months or 12 months later, very solid returns with a very high positivity rate. Even on the first half, when you look at a positive first half going back to 1950, the second half tends to be positive with an average return of about 6% for the S&P 500, higher 80% of the time. So you can slice and dice all the different momentum studies, but when you have this much momentum in this short period, just about every single time, you have momentum continuing, and that's what we expect, at least on a shorter term basis here. Maybe we get a little bit overbought. We digest some of these games later in the summer, but hard to argue with a bull market making new highs.
Yeah. So Adam Turnquist, Chief Technical Strategist at LPL. I know that we're going to continue to obviously cover where we're heading from here, but what more can you share specifically about sectors that you're going to be watching during this earnings season?
I think the big banks are going to be key. What is the guidance here? How is the One Big Beautiful Bill Act going to affect that guidance as well? What are they expecting in terms of net interest margins? One of the other areas that will be interesting is just their loan loss provision. So how much they're setting aside for bad loans. That will give us some insight into how they view the consumer, and also just what their view is on interest rates and the forward path there. I think there's a lot of uncertainty with what the Fed is going to do this year, what inflation is going to do. We'll get an update there in CPI So that's going to be big. We got a little bit of a insight from Delta last week on the consumer, arguably a pretty positive read-through from Ed Bastian, the CEO over at Delta. Be interesting to see if we get the follow-through from some of the banks on that consumer side.
Yeah, I do want to talk about that inflation data because, of course, we know that is what the Fed seems to be watching most closely here. The labor market has been holding up. Inflation is kind of sticky, it seems like, still above the Fed's 2% target. But with CPI due tomorrow and PPI wholesale prices due on Wednesday, what are you anticipating that they tell us?
For the inflation print tomorrow, it'll be the services sector inflation. That's been the sticking point or the sticky part of the inflation story, that housing component within CPI. That's been holding up the headline print and the core print as well. Hopefully we'll start to see that come down for the Fed's sake. And then, of course, we'll see what the Fed ends up doing. Expectations for a rate cut this month, pretty low, I think around 6 or 7%. The Fed's just been in this wait and see mode. They're waiting for the pass-through inflation to show up from tariffs. We haven't really seen it yet. We'll see how long they wait. Obviously, there's a lot of pressure on the Fed from the White House to start cutting rates, maybe the market as well. But the Fed has told us it's more of a one-time event. They expect it to be, at least for the impact from tariffs. The market seems to agree. When you look at the market implied inflation metrics like break-even rates or CPI swaps, they're pretty well anchored. Not quite down to the Fed's 2% target, but they haven't moved a lot in wake of all of the tariff news that we've had.
Adam Turnquist, Chief Technical Strategist at LPL Financial, joining us from the Midwest. Thank you again, Adam.
All right, thanks for having me.
Yep.